You say that Meta, it has a high bar following results from Alphabet. What do investors need? What do they need to see to justify this huge rally for Meta year to date?
I think as long as the top line comes in marginally ahead of where the street is, as well as the focus on the year of efficiency, quote unquote, continues, I think that the stock should continue to go. The caveat for Meta is that investors have increasingly shifted their valuation methodology from earnings over to free cash flow, and the capex spending is going to be a major area of focus. So long as you don't see capex kind of go off the rails here with their investments in the metaverse and AI and whatnot, the stock should do reasonably well.
All right, I also want to talk to you about Microsoft for a second. So no real details on its AI co-pilot rollout. We're not getting a date. We're not getting a time. We just have some pricing details. Could that possibly be one of the first cracks we're seeing in this AI narrative?
No, I don't think so. I think when you look at Microsoft and Google, it was really just a tale of two different sets of expectations. You have these astronomical expectations for Microsoft at 11 times sales. I mean, it's supposed to be the poster child for AI, with the exception of NVIDIA. And there was an incredibly high bar, whereas Google, Alphabet, has been essentially left for dead. So it's not like Microsoft did exceptionally bad and Google did exceptionally good. It's just that the bars were set at different levels, which is why you're seeing actually both results were good for both companies. But it's the set of expectations, and investors, unfortunately, have been slightly getting ahead of themselves, given the run that we've seen in the first half of the year.
All right, I want to get your take on another big mover, Snap. Shares plunging double digits after overall sales in Q2 declined by 4%. The company offered some weak forecasts for the current quarter, also warning of margin pressure due to big investments in AI.
Yeah, I mean, I don't want to get too started on Snap. I mean, the problem with Snap is, I feel like they have an identity crisis, don't know what they want to be. If you're a small advertising platform, you have to be a niche platform with niche use cases in order to extract the most value out of users. They're trying to be Facebook. They're trying to be everything to everyone, and that's just not a model that's sustainable, especially given the investments that Meta is able to do. So I think that share shift is going to continue, and because they're not hyper focused on the niche maximizing the value per user versus trying to go to all users, I think that there's a structural problem there that's not going to be fixed anytime soon.
All right, we have a developing story of sorts. I want to talk to you about Amazon, especially with its 5% weighting in the NASDAQ 100, so obviously has a big impact on that index. The FTC is reportedly finalizing its long-awaited antitrust lawsuit against Amazon in a move that could possibly break up parts of the company. Taking a look at shares, down almost 2% right now. What do you think about this as a risk for investors, and what do you think about this for the long-term future of the company?
Yeah, I'm not taking it too seriously. I mean, sometimes I think that Lena Khan forgets where she lives because if she acts more like a European regulator, which is mandated with protecting competition and other businesses. Whereas in the United States, the laws and mandates state that you have to protect consumers. And I can't really see consumers being harmed from increased selection and faster delivery. I'm sure, Frank, I don't think you've been harmed by getting more selection and speed of delivery from Amazon.
But James, in all fairness, the issue is fair competition. The idea that the FTC is trying to put forward is that they favor people that use the logistics business as opposed to just use their marketplace business.
No, I get it, but I mean, at the end of the day, it's a service. I mean, you elect to choose it or you don't, and the details coming out of this are incredibly sparse. I mean, there's that one article about it several hours ago, and we don't really know what's in it. And then if you look at the history of wins versus losses for Ms. Khan, it leaves much to be desired. So I until I see more meat on the bones where consumers are harmed and these practices are malicious, I'm just not buying it.
So
I think it's down more on Microsoft.
Why do you think the stock's moving now? Because there was a report a few weeks ago, I believe it was June 29th, very similar report. It didn't have the same detail about August, but similar report that the FTC was looking at the situation, investigating, and possibly looking to break up the company. Why do you think the stock's moving now?
Yeah, I think it's more on Microsoft. I mean, you see the deceleration in the cloud business in Microsoft. The guidance calls for more deceleration in the third quarter. This is supposed to be the bottom for Amazon's the slowdown in the AWS growth rate. So, the question is, will 3Q be slower than 2Q, which is what Microsoft is essentially suggesting with their guidance. So that I think it's down on that, not on this FTC.
All right, so if you think it's down on that, what are you expecting from Amazon when they report?
Well, it's a big position, so they better do well for us. We're expecting, we're looking for 10, 12% growth in the AWS this quarter, and then improving from there in the third and fourth quarters as we progress through the rest of the year. So, I mean, that's the big whammy. We need to see AWS show a double-digit number this quarter. I think all the other segments should come in just fine.
All right, so you're expecting 12%. Do you need to see an acceleration, you're saying, for the rest of the year? And then what about AI? Are you expecting a lot of AI commentary?
Yeah, but the problem is with AI, that's behind the scenes, and you can't really get the tangible use cases that you do, with the other companies on how AI is benefiting. How AI is benefiting them is that they're able to get a better selection near you faster, predicting what you're going to need, so that actually lowers the cost of delivery for Amazon. So you're going to see it through the lens of margin versus anything else. So behind the scenes is where they'll probably be talking about it.
Yeah, but what about their cloud business? I mean, you see Microsoft, no specific date, but offering its AI Copilot for $30 a month. Amazon has not made any announcements that are even similar to that just quite yet.
Yeah, I can't really see them making anything similar to that just now. I mean, I think AI is going to power their logistics network and ensure that they can have the right selection at the right location at the right time. And that's ultimately what it boils down to. I don't think you're going to see kind of subscription offerings of that nature.